The trade war between the United States and China has escalated. On April 12, 2025, China raised tariffs on a range of U.S. goods. These tariffs now stand at 125%, a significant increase from the previous 84%. This move comes as a direct response to the U.S. decision to increase tariffs on Chinese goods to 145%. The world watches with bated breath as the two economic giants lock horns in a battle with no clear winner. The U.S. argues that its tariffs are necessary to protect American jobs and industries. They claim that China has engaged in unfair trade practices. These practices include intellectual property theft and forced technology transfer. The U.S. wants to bring manufacturing back to its shores. It aims to reduce its trade deficit with China. China, however, views the U.S. tariffs as protectionist and harmful to the global economy. They argue that they are being unfairly targeted. China insists that it is committed to free trade and open markets. They warn that the U.S. tariffs will hurt both economies and disrupt global supply chains. This new round of tariffs marks a significant escalation in the ongoing trade war. It has heightened fears of a global recession. Businesses and consumers alike are bracing for the impact. China's response to the U.S. tariffs has been swift and resolute. The Chinese government has condemned the U.S. actions as economic bullying. They have vowed to fight to the end to protect their interests. China's finance ministry has made it clear that they will not back down from a trade war. They believe the U.S. is trying to stifle their economic rise. In retaliation, China has targeted key U.S. exports like soybeans, aircraft parts, and pharmaceuticals. These tariffs are designed to inflict maximum pain on U.S. industries. China is also considering other countermeasures such as restricting access to its vast market. They could also devalue their currency to make their exports more competitive. However, China maintains that its actions are justified. They see it as a necessary defense against U.S. aggression. They argue that the U.S. has consistently acted unilaterally and disregarded international trade rules. China has filed another lawsuit with the World Trade Organization challenging the legality of the U.S. tariffs. This legal battle could take years to resolve. It adds another layer of complexity to the already strained trade relationship. China's stance has received mixed reactions globally. Some view it as a legitimate defense against U.S. protectionism. Others see it as an aggressive move that could further escalate the trade war. The escalating trade war has sent shockwaves through the global economy. Financial markets are volatile. Investors are wary. The International Monetary Fund has warned of a significant slowdown in global growth. There is a real fear that the trade war could trigger a global recession. The effects are already being felt by businesses and consumers worldwide. U.S. companies that rely on Chinese imports face higher costs. They are forced to raise prices, hurting consumers. Chinese companies exporting to the U.S. face similar challenges. They are losing market share as their products become more expensive. The trade war has also disrupted global supply chains. Companies are scrambling to find alternative suppliers. This is leading to delays and increased costs. The uncertainty created by the trade war is making it difficult for businesses to plan. Investment has slowed. Hiring is frozen. This trade war is not just an economic battle, it is a geopolitical one. It reflects the growing rivalry between the U.S. and China for global influence. The trade war is straining relations between the two countries. It is making it harder to cooperate on other pressing global challenges such as climate change and nuclear proliferation. The trade war between the U.S. and China is about more than just tariffs. It is a struggle for economic and technological dominance. It is reshaping the global trading system. The outcome of this conflict will have profound implications for the future of the world economy. The U.S. wants to maintain its position as the world's leading economic power. It sees China's economic rise as a threat to its hegemony. The U.S. is using tariffs as a tool to pressure China to change its economic policies. They want to protect U.S. intellectual property. They aim to ensure a level playing field for American companies. China, on the other hand, is determined to become a global economic superpower. It is investing heavily in innovation and technology. China aims to become self-reliant and less dependent on the U.S. The trade war has only strengthened China's resolve to achieve its economic goals. The long-term consequences of this trade war are still uncertain. One thing is clear, the global trading system is undergoing a period of significant transformation. The rules-based order that has governed international trade for decades is being challenged. The outcome of this struggle will shape the global economy for years to come.